Welcome to the live stream. I'm Mitch Goldberg, and you're watching Be the Boss of Your Money. Gains are getting harder and harder to hold on to. And after today's announcement or last night's announcement from Nvidia on their blowout best quarter ever, probably in the history of my career, which is over 30 years, the stock still went down today. Gains are getting harder to hold on to. And it spells trouble in a number of ways. And what we could get into is a contest, a race to lock in profits before your fellow investors lock in profits. And it creates a vicious cycle of down, down, down. Could that happen? It may have already begun. And it's getting harder to forecast new highs by the end of the year because the clock is just ticking away. It's running out. The summer flew by. We're looking at September 1st in a week and a day. We're looking at Jackson Hole, Wyoming speech tomorrow. Federal Reserve Chairman Jerome Powell speaks tomorrow in Jackson Hole, Wyoming at a big conference. The following Friday, we get the big employment figures, the labor numbers. Couple of big things coming up in a time when volume seems to be pretty light, but we're worried about the consumer who is stretched, maxing out credit cards, and who's out of pandemic surplus cash. And we're seeing that reflected in a number of areas. And each stock that I'm looking at, you could say it's a one-off event. The stock is down because of this. The stock is down because of inventory. This one is down because of a computer glitch, whatever. I'm talking about Southwest Airlines, for example. But when you start to add it up one after the other, you can't keep saying these are one-off events. You have to start to acknowledge that a pattern has emerged, and it's not a pretty one. Let's roll the introduction. We are going to get into these things, and we're going to get on. We're going to get off. While you're there, if you have any questions, please hit me up. I'd love to hear from you. It's the best part about doing this. Carlos Mitch just landed in Ohio to see a client, and I tuned into you, brother. You rock, man. I am so glad I could be part of your afternoon entertainment while you're traveling around the country visiting your lucky clients. And here we go with hopefully this will be a good show just for you, buddy. Let's get going with the intro. Here we go. We're just getting started here. Thank you so much for joining me. So the first thing we're going to do is we're going to talk about Nvidia with a blowout earnings number. Remember, we were talking about this for a week and a half, saying the big thing is Nvidia Wednesday after the close. They delivered, and and my feeling was that expectations were so high going into the quarter that unless the company came out with just the blowout of blowout quarters, the stock can't go up anymore. It's for the short term. I mean, I can't go up on an earnings announcement because the stock is up 200% on the year. It's America's favorite stock right now, being that it's a component of the S&P 500, the biggest winner this year in the S&P 500, up 200%, $1 trillion plus valuation already. By the way, you can't invest directly into an index, but you could invest into a security that tracks your Mimics index. You knew I was going to squeeze that one in there. So Nvidia pops after hours yesterday. It's up about 10%. By the time we got in this morning, it was up about 7.5%. And then throughout the morning, it's only up 5%, up 4%. And after hitting a new all-time high early this morning, it went down on the day. That to me indicates that the buyers are spent, they're exhausted, meaning there's no more money, right? There's no more money for follow-through for now. Everything's subject to change, but I'm reading the tea leaves. There's no more money for follow-through that could propel stocks even higher after a pretty darn big run in the Nasdaq so far this year, which has helped pull up the S&P and help pull up the Dow. Did I say you can't invest directly into an index? Yes, I said that. So what we need to do now is take a look, survey the landscape, and you need to figure out what you are going to do. And we have Jeff. I remember who you are, man. Hey, I know you meant to say Mitch there, buddy. I know. Hey, Mitch, your old neighbor, tenant in Boca Raton. How are you, Jeff? Nice to see you, and hope your kids are doing well. And I still see you on Facebook every now and then. That's pretty cool. I'm glad we were able to keep in touch. You've got your new life going, and that is all good stuff. Thank you, Jeff. I really appreciate you tuning in. I ask a lot for my connections on LinkedIn, Facebook, YouTube, and I really appreciate all of you taking the time to tune in. I get a lot of comments. I see a lot of people out, and they say, oh, I watch your show. I really appreciate that. So let's survey the damage, because this goes with the theme of the show. It's getting harder to hold on to. It's getting harder and harder. There we go. Hey, pal, and you got it. All right. Thank you, buddy. Hey, sorry. No worries. No worries at all. I get called Matt, Mike. I've been called much worse. It's no big deal. But it's getting harder to hold on to a profit in this market. I'm going to show you exactly. I'll give you some examples. But the close in Nvidia was, from a technical perspective, terrible. To go up like that after this amazing blowout quarter. The chips that they make for artificial intelligence are in huge demand. Companies like Amazon, Google, Microsoft, the heavies of heavyweights in the cloud sector, can't get enough of these chips. It just sometimes, we've talked about this, enthusiasm gets ahead of the stock price. No matter how good the story is, eventually the story becomes too big. The stock prices get too big and they wind up going down. The marginal buyer, the person, the investors out there with the extra cash to throw into the market, have spent their cash. We've just seen outflows out of stock funds for the first time in a year in ETFs. So this is a tough close, and it's dragging down the rest of the tech sector. It validates the numbers from Nvidia, validate the importance of artificial intelligence and the spending going on, but it tells you, for an investor who wants to participate in the upside, for now anyway, stocks are ahead of themselves. And I'm looking right now at consumer discretion. I should put you on my screen and let you know exactly what I'm looking at. So I'm going to do that right now. Hold on. That's not what I wanted to do. All right. This is not quite what I was going to do, but let's get into it. And no, hold on a second. I'm looking at the wrong thing. All right, here we are. This is kind of annoying. I'm in the wrong screen. And I'm going to close out of that. Just bear with me 1 second, guys. This is something I wasn't thinking about putting this up on the screen before, but now I really want this in front of you. I'm going to show you what I mean when it's getting harder to hold on to gains. First thing we're going to do is we're going to look at the big financial stocks, the FANG M stocks. I'm going to move this to the other screen. I'm going to make this larger. Back here. All right. Oh, there you go. Okay, sorry about the interruption. Nvidia, the stock was over 502. It closed at 470. Okay, so you know what? It looks like it may have eked out a gain, but when I went on the quote before, it looked, yeah, after hours, Nvidia is trading down, $4.50 a share. Okay. It was up 47 cents in the day, but now down another $5 and after hours trading. I want you to know. All right, Jeff, you're ahead of the game there, man. Look at this. Jeff has already got us going here with the call. Nvidia $4 after hours. So this is what I wanted to show you. Really bad close. This is like when you get that spike up and then they close down like this. This is just a really bad spike down. But let's continue to the watch list. If you see this here, Google's hanging up okay, hanging out there, but this line is the year low to the year high. You see this? I'm moving my cursor over here. And Microsoft from 366 to 319, that's like a $36 stock, let's say to just about 32. Not a huge move. Meta, let's say it's like a $32 stock down to a 286, like a $28 stock. Apple is 198, 176. Amazon 143 to 131. Netflix 485 to 40. That's like a $48 stock going to 40. And it's not just those. And if you want to know the stocks that I follow, you're welcome to ask. Let's take a look at another place where you're really seeing like death and destruction all over. Okay. Now, I know you see Foot Locker here up 5%, it was up 82 cents. But if you take a look, let me make this a little smaller. If you take a look at Foot Locker, all right, it was in the 40s. Look at that red. That's how far down it's come. Look at Dick's. Look how far down that's come. If you look at Peloton, Peloton was a darling of the internet. And then you could take a look at a bunch of others. You could look at CVS. You could look at Under Armour. The point I make, you could look at Starbucks. The point I'm making is I can give you a one-off answer on why Starbucks could be down, on why Foot Locker could be down. Dick's Sporting Goods, I could give you one. If they said, shrinkage, they have a lot of stuff that's being stolen. They're losing sneakers and apparel to theft. That doesn't explain the whole story. When you see one after the other, and I look at all these lines from the year low to the year high, and you see a lot of red because there's a big gap from the high to the middle or to the low end, it's too many stocks that are just giving up so much gains so quickly that is making this market treacherous. And you don't know it yet because you're following the S&P 500. You're following the NASDAQ. But those indexes are dominated by just a handful of super mega cap large stocks. But underneath those, there's deterioration happening. It is starting to spread to the mega cap stocks. And if those mega cap stocks start to come down, there's really nothing holding up the market. These little ones like a Dick's Sporting Goods, a Foot Locker, these stocks could go to zero tomorrow, all else being equal. You wouldn't even notice it in the major averages. But when you start to see Nvidia and Apple and Microsoft start to drop, you're going to feel it, even if you're just an index investor. So that's what's going on. It changes the landscape. I wish I had something a little bit more positive to say. The positive thing is we focus mostly on personal finance, so we will get through this. But this is the lay of the land. This is happening in the market with the Jackson Hole Symposium tomorrow, employment figures coming out next week. Volume a little slow because everybody's away. It's the last week of summer. I don't really expect any change in direction. This is something we've also been talking about for the last couple of weeks. We thought we had a reprieve maybe the first few days of this week. Monday, Tuesday, Wednesday, things we thought could turn around. But no, it doesn't look like it. So we'll see what things look like after Labor Day. I'll be in next week. I'll be doing this live stream maybe Monday or Tuesday. But even I, pretty hard worker, I'm booking by the middle of the week next week, and I'm not coming back till the next week. Have a great day, everybody. Jeff, Carlos, thanks so much for joining. I wonder if you two know each other, by the way, because you both live in Boca. All right. I'll speak to you guys soon. Take care.